Hello, this is a tradesight trade recap for the stock market on Thursday, August 6, 2015. We've been talking over the last week or so about how August can be a very clean month of trading. A lot of people, that's counterintuitive because the volume tends to dry up and in the market on during August, and so people think things get choppy and nothing's around to trade, but it's really the opposite a lot of times. If you're finding the right patterns, the most consistent, the highest probability trades, what you're going to find is that those trades play out much more easily in the month of August. And granted, that's not every just trade that you might chase out there, but the real good ones, the high quality trades, are more likely to just work very cleanly. And so just like yesterday when I walked you through a couple of them, I want to talk about one we had today on Thursday, August 6th. That was just a real nice setup, and show you how it played out and how the information we had helped us manage the trade accordingly. Charts, as usual, of course, brought to you by eSignal. This is a tradesight trade recap. So here is the LinkedIn. This is the daily chart of LinkedIn coming into today's sessions. This is what it looked like before today. And as you can see, there was a nice setup for a breakdown point under the lows of the last 8-9 months. Okay, that low number back in May is 191 exactly on the chart. So of course you've got a breakdown point under 191, a daily chart. This chart's a little gappy. That's the only thing that doesn't make it ideal. The stock tends to gap around a lot. Gaps on earnings, gap up, gap down. But overall, that's still an inverted cup base breakdown, and it's a new low for 8 months, and that's enough to get you excited about a breakdown and being on the short side of that trade. So that's what we were looking at coming into the day. And then we kind of moved around a bit and got ourselves a different entry point, and I'm going to walk you through everything that we did here. So first of all, what did the market do today? Here's the broad market. This is the ES futures. This is a 5-minute candle, so you see both Wednesday and then Thursday. So the vertical dashed line right in the middle of the candles that you see is the divider between the 2 days. And we gapped up a little bit on Thursday morning, and we sold off very sharply. Gave us actually a very, very nice clean futures trade. We made a lot of money on the futures side early, right out of the gate on that move. There's a certain setup we look for. It triggered perfectly about 4 minutes into the market and worked great. But as you can see, the rest of the day, I'm just showing you what the day looked like. The whole morning bias was to the downside. We bottomed out almost exactly halfway through the day, and then they didn't really come back as much from lunch, and we just sort of drifted back up. We closed right on the VWAP, which is that purple line. But overall, the key here is that we had a negative bias for the entire day, which is, of course, what you want to see when you've got a short setup like this LinkedIn. Now, here is the LinkedIn chart, 5-minute candles. This is showing you the first candle of the day so far in LinkedIn, and that's it. So we can see the prior day's trading action. And what you'll notice is that not only do we know we have that 191 breakdown point that we had already pointed out on the daily chart, but actually there's kind of a basing action set up against yesterday's lows. And that number that you can see is 191.62. So the call we made for our actual subscribers was short under 191.62. What that looks like is you get it out in the Twitter feed, you can see right here, LinkedIn less than or short under 191.62. So that was the trade call that we made today. And again, that's leading to that ultimate breakdown under 191 on the stock, which is just an even better point where the stock's going to hopefully fall apart. And so far on this setup here, what I can show you is, we do see tiny red and tiny green lines above the high and the low of this opening candle. Let me go a couple candles in. So let's just get this the gap fill out of the way. We're trading sideways here for the first 15-20 minutes of the day. We actually went up. Now that red line you see us approaching, that's called the upper pressure threshold, and you can see at the bottom there's a green line. That's the lower pressure threshold. We have those numbers every day coming into the day. You can look back at the prior day, for example, and look at the red line, see how that was to the penny, the high. And we have these numbers coming in because they're such major calculated resistance points. It really gives you a lot of extremely useful trading information from a technical perspective in advance, so you know where the biggest support and resistance points are going to land. And even the green line the prior day ended up basically being support for the session, although you did sort of get under it for a couple of candles. So here we are. Well, obviously we're heading up, and that's not what we're talking about here. We're looking for a short on this trade. But look at this red line and the way that we stall out just a few pennies underneath it. And then, like I said, that green line below is at 189.52. So that's way out of range for what we're looking at right here. So our initial idea on this trade, I'm going to draw the 2 points. One is to short it under the low of yesterday. That's this first blue line that you see. And then, of course, just so you remember, the main breakdown point, the daily chart point, the adder, if you will, that's to add to the short under 191, really pile on. And at that point, you'll have a cushion if it plays out that way. So those are the two numbers we're looking at. And, it's not until about an hour in, really, that this thing starts to approach those levels. More than that, even. We're talking, see, we even came back up a bit. Here we go. Now we're an hour and a half in, and we're approaching these levels. Now, the way that pattern has played out has actually improved what I call the length and strength of the pattern. In other words, this intraday pattern from yesterday's lows is now even better because we've got a longer base and sort of a stronger formation, and the volume's picking up as we head down here. So that really makes that first entry point very nice. And you can see we triggered short under the first entry point. That gives us our entry under the 191.62 level, and actually still moved straight to the 191 level. Look at that first pause point. And that's because obviously that's the daily chart breakdown. Now we triggered that breakdown initially here, so we've already got a pretty decent push, and we're in the money, and we spend a little time. Look how well. This is why I like using that intraday low the day before first, because that's the support level intraday as opposed to the daily chart pattern. And so you by taking that entry, you break under that level, you come back up, and look how we exactly retest that. And what's really going on here is we're retesting the intraday action while we're trying to form the broader daily chart breakdown point. So that's very good, solid technical action. As long as you fail right about there, you should be good to go. And look how it just can't get back above that level, that blue line, and then we roll. So now the daily chart breakdown has been confirmed. We're getting the close underneath that level, and that's really adding to our gains. Now, there's a couple of things that play out from here that are interesting. One of the things that you can see on this chart is, oops, sorry, I didn't mean to draw that. One of the things that you can see on this chart is that we're starting to get a seeker and a comer startup count. That's the 1 through 9 green numeric count that you're seeing there. We're going to keep an eye on that as well as we move forward. Now, here's the next interesting point. Remember that green line, the lower pressure threshold that was so far out of the way to start the day at 189.52? Look where we get down to. That literally, we paused at 189.54. That's the low of that candle. So again, those pressure thresholds are so key, because now you know that you've got to have a piece of your trade off at this point, because that could be the major support level. Doesn't mean it's the end of the trade. We can still go lower. But initially, if I'm looking for a place to take a piece off, you got to do it on that move, and that's where we mentioned it to everybody, to take a piece of the trade off. So you've already gone from 191.62. You've broken 191 itself, the daily chart breakdown, and you found support exactly at this green number that we had coming into the day. And look how you get a little bounce off that number. The other thing we've done here is we've just completed a 9-bar startup phase. So now we're going to get the actual comer count, hopefully heading towards the 1 through 13 pink numbers or magenta numbers on this stock. So what happens now is, look at this. We bounce back up, and we're kind of retesting that 191 daily chart level. So again, every breakdown point we're retesting along the way, but we're doing it very methodically. This is what August is like. Okay, it doesn't put you in any danger. It's just being very methodical about the breakdown point and the retests of those points. And now here we are again. Look at the low of that candle, right on the 189.52 pressure threshold. So we hit it once, we bounced, we retested the 191 daily chart breakdown. Now we roll over, we're back to the pressure threshold. Okay, and this time we break the pressure threshold. There you go. Okay. And then where do we go from here? And I'm just going to kind of move forward instead of walking you through it verbally. At this point, what's interesting, if you understand the Comer tool, is, here we are. We're only 9 out of the 13 into the Comer count. And you know that the Comer is designed to show you where the energy exhausts on this move. So this should help keep you in this trade. There's 10. Okay. Now there's 11. There's 12 coming up as soon as I print the next candle. Okay. And actually, if I showed you, this is going to be 13 right here. So there's your 13 signal. That's your exhaustion signal. Okay. That, to me, on a move like this, basically says really high probability chance, unless the market's just completely breaking down, really high probability chance that this is the low of the day right here. So this is where you can trap your final gain, lock it in here on the trade. And then just for giggles, let's see what the rest of the day did look like. We tested that low again. Look how we got stuck between that low called by the 13 and the green line. We've come back up to test it from underneath. That's the pressure threshold, right? Can't get through either one. And where do we close the day? Right on the pressure threshold. There it is. So there's your move in LinkedIn. And again, a very clean, very straightforward move. Not a lot of wiggling around when the trade initially triggered. You got in, you never got put in any danger. And that's what August can be like. It can be very clean, very technical, even though the volume tends to be down the market. Now, of course, I say that. What's interesting about the volume right now is that we actually put in a 2.1 billion share day on the NASDAQ today. And let me show you what that looks like. 2.1 billion shares on the daily chart. What does that get you? It gets you, actually, let me do it on this chart here. It gets you the highest volume day in a long time. Okay, that's the highest volume day right up here. Bigger than anything we saw in July, bigger than all but 2 days in June, bigger than all of May. This is not an options expiration, by the way. A lot of those spike days that you see volume-wise are options expiration, and this is not that. So this is very clearly just a very strong volume day. Interesting to see that happening in August, of course. But nevertheless, it did. So it's a combination of, yes, August can have these very clean moves. And on top of it, we got some nice volume, which always helps things work more technically. And, you bank your money where the correct setups are really all the pieces stacking together for the highest probability. You don't need to run 50 trades in a day. If you find a setup like this and you see that everything's lined up between the great intraday pattern, the great daily chart pattern, and the market direction working in favor of that, just get involved in that heavily. And that's going to pay you much more than trying to find 15 or 20 or 30 trades in a given day. This has been a TradeSight Trade Recap. Hope to see you in the lab this week.